Hey, everybody, it's Brad live from Miami, Florida. Nice to see everybody here. And I always like to start at around 5 minutes after the hour. So that's about what time it is. So I would love for you to put in the chat where you're at right now, where you're dialing in from. And so I could get a feel for who's on. And so if you want to go ahead and do that, go ahead and put in the chat where are you coming in from. Are you in Florida? Are you in Texas? I see Houston. Um, I see people from California, Texas, Dallas, Nashville. Um, people, there's another Texas, Idaho. Yeah, so look, California. All right, so we got people coming in from all over the country, which is typical. And this is going to be a short training tonight. And why is that? I did something similar last week, so this is sort of a repeat of what I did last week, and it's also a reminder for some of you that I am doing a live training in Dallas. And so I know some of you are registered for that event and will be coming to Dallas. And maybe some of you haven't heard about the event or haven't yet registered. And the good news is you could still register. So, what I'm going to be talking about a little bit tonight, but a lot this weekend in Dallas, is really like how we could take advantage of what's happening in the market right now. And I don't mean take advantage like take advantage of people. I mean, recognize where we are in the market. Okay, we are in a bottom of the market. Like I've been doing this 25 years, and many of you may remember or may be aware of what happened nationally with the economy and many asset classes in 2008. We call it the Great Financial Crisis. And a lot of people lost everything, or a lot of people lost a lot. And it was hard to do deals during that time. Investors were waiting, they were on the sidelines. Lenders weren't lending, investors were concerned. But then somewhere around 2011, 2012, for sure, everything was thawing out. And the people that were buying apartment deals during that time, which I was one of those people, like we literally made a fortune. And the challenge was a lot of people were still uncertain. Times in 2011 were not booming. There was still some signs of like, hey, are things going to get worse? Are things going to get better? Maybe we should wait it out. And there were other signs that showed that we were in a bottom of a market. And I am a student of the game. I have an engineering degree, an MBA. I spent 14 years in corporate America before I started investing in apartments. And so I study patterns, I study trends. And of course, you can never be certain, but in hindsight, I guessed right and started buying aggressively in 2011, 2012. And those are the deals that I've made probably the biggest margins on. And so to me, we're kind of in that time again. We're coming out of this crisis that was created in 2023 by the Fed raising rates like 16 times in 12 months, created a lot of inflation. There was a lot of things happening that during the pandemic where residents got paid or general public got paid to stay home and not go to work. And that created a lot of issues on its own. And there was a bull market for apartment investing from 2012 to 2022. And virtually everybody got into the business during that time. It was just an up market. And so you didn't necessarily have to be really good to make a lot of money. You just had to get in the game. And of course, being good helped. But the sooner you got into the game from 2012 to 2022, the more money you made. And unfortunately, some people just got into the game in 2021 and 2022, where in hindsight, we were at the top of the market. And those people that have deals to this day, are still facing challenges because right now pricing is down, depending on the market that you're in, but anywhere from 20 to 40% down from where we were in 2021 and 2022. So right now, what I see is a window of opportunity for us to get into these deals and truly create like generational wealth. Okay. So just as an example, in 2011, I bought a deal for $13,000 a unit. Yeah, it was a mess. It was a distressed deal. It was somebody else's problem. Somebody paid for it, underfunded it, mismanaged it, and the market turned in 2008, 9, and 10, and the conditions deteriorated. The economy faltered. The tenants couldn't pay the rent. So when we bought it in 2011, it had low occupancy. Lenders didn't want to finance it. I had to put a huge down payment on it. And ultimately, some people, when I was buying it, they thought I was, a little cuckoo. But I could tell you, I bought that deal for $13,000 a unit and sold it in 2016 for $42,000 a unit, and it was 213 units. So that was one of the deals that made a really big impact on me personally, on my personal financial statement. Now, I had started in 2002, but none of my deals had made that much money as the one that I bought in 2011 and sold in like 4 or 5 years later. So I truly believe, based on what's happening right now, and Tony Robbins is one of my mentors, that history repeats itself. So we can see trends in the market. And, I have a lot of charts and graphs that I'll show you all that come this weekend about where we are right now with rents and vacancies and occupancy and sales price, and where we were and where we are and what the forecasts are. So I truly believe that it's a great time to get into the game. So what I'd like to do now, and I see we have a lot more people that joined as I was given that introduction, I'd just like to share some slides and go through some concepts. Okay, so this is going to be useful for you, whether you're attending the event this coming weekend in Dallas, or whether you're not. So either way, I hope to present some useful information. So I put together a few slides here, and I'm just going to go ahead and share them. So this shouldn't last more than 30 minutes from where I am right now. So I know many of you may be seeing me or hearing me for the first time. So I'm going to give you a little bit of background about how I started and why I started and how I scaled. And then I'm going to talk about why attend the upcoming event. Now, if you can't attend, stay on, because I'm going to give you a preview of what it is that you're going to learn. And there's going to be some key concepts in here that will benefit you either way. But for those of you attending, I want to give you a preview of what's going to happen this weekend at the event, what you will learn. And then for those that are still able to come and register and rearrange your calendars to be in Dallas, Texas, starting at 5 p.m. Friday, finishing at 4 p.m. Sunday, there's still opportunity for you to register. So a little bit about me. I have 14 years experience in corporate America. I never thought I'd be a real estate investor, yet alone educating thousands of other people to invest in real estate. Neither of my parents invested in real estate. Neither of my parents finished college. And they impressed upon me when I was a little boy how important it was for me to study, get good grades. And I did that throughout grade school, throughout high school. I went to college and I studied engineering and tried climbing the corporate ladder. I worked for 5 different companies over 14 years. I had some successes. I had some setbacks. I once had a boss tell me that I would never amount to anything. And I asked him why. And he said, well, Brad, you don't come in early. You don't stay late. You don't work through lunch, and you take all of your paid vacation. And I thought to him, wow, I don't want the life that you have. And so when the Rich Dad, Poor Dad books came out way back in the year 2000, and I'm not sure exactly when they came out, 1999, 2000, but I read the Rich Dad, Poor Dad book, the cash flow quadrant, and it taught me a new way of thinking about money and earning money and paying taxes. And so rather than wanting to continue to be an employee, I wanted to be a business owner, an investor. So I went to a real estate investing seminar. I hired the mentor, paid for their program. and followed the system. And 8 months later, I bought my first investment property. It was 32 units. And I had no previous real estate investing experience whatsoever. And over the last 24 years, I've owned over 11,000 units, mostly as a general partner. So this means where I find the deals and fund the deals and manage the deals and have investors, and I invest and I have investors, and I'm on the managing team, also known as the general partner. So that's been my model pretty much for the last 2 decades. Legally, I've paid no tax. If I had to update the slide, I would say 6 out of the last 7 or 8 years, I've paid 0 federal income tax because the government gives us tax benefits when we invest in housing. Okay, it's true. And I'm going to talk about this a little tonight and more this weekend. And once I was able to retire myself, I quit my 6-figure job in 2005. I started mentoring others in 2006. I formed my own company in 2013. And the people that I've coached and mentored have absolutely crushed it for the most part, buying literally hundreds of thousands of units, over $10 billion of apartment buildings. And many, many, many of them have went on to make at least $1 million or more from their investment. So I'm really, really proud about that. So this is a picture of my first property that I ever bought. It was 32 units. This is a picture of my second property, 30 units. This first one was about $1 million. I bought it in 2002, and it put like $4,000 a month into my pocket like clockwork. This one was 30 units. It was just under $1 million, and it put another $4,000 a month like clockwork into my pocket. So I have 62 units. I'm making $8,000 a month from my investment properties. In my job, I'm making $10K a month, but I'm paying tax. So I'm bringing home around $7,000 a month. And so one of the things I learned from Kiyosaki's books, in fact, he has this game. Has anyone ever played the cash flow game? If you played the cash flow game, type in the word cash flow into the chat. I want to see if anyone ever played that. Yeah, several of you were typing that in. So you know what I'm talking. And if you read the Rich Dad books, type in Rich Dad. Just type in Rich Dad if you read Rich Dad, Poor Dad, the cash flow quadrant. Okay, so most of you understand. I see a lot of people responding here. Most of you understand the concepts that I'm talking about. And in the cash flow game, the goal is, it's like you start off and you draw a card and you have a job. And the goal is to buy investment properties that the cash flow, cumulative cash flow, is greater than your job income, and then you quit your job. And that's when you actually leave the rat race. So look, the reason my apartment investing training event is called Rat Race to Retirement is because I was in the corporate rat race, as were people just like you. Many of the people that come to my events are in the corporate rat race, or maybe some other rat race of working at a pizza shop or working in a franchise, or, working day and night, starting their own business, and they're not getting anywhere. So they're in some sort of rat race. And after a few short years of investing in apartments like I was able to, they were able to, quote, retire themselves from whatever they were doing before. So this is why I call the event Rat Race to Retirement, by the way. So I had 62 units, pretty much retired me from corporate America. And then I went off and bought larger deals in a syndication model. And why did I do that? Because I ran out of my own money. I bought 62 units with my own money, and I had no more money. And then a broker brought me a 250 unit, and I learned how to raise money, follow securities laws for raising money legally, buying a bigger deal, hiring the management company, and rapidly scaling my business. So look, I've been doing this almost 25 years. I've done almost 70 deals personally. the peak, I have owned over $1.2 billion. That should be a billion, $1.2 billion of assets. And my students, wow, I mean, they've done $10 billion of apartment communities all over the country. And I've spent literally, no exaggeration, millions of dollars of my time and of my money learning how to get better and better in this business. So that's a little bit about me. And when I started doing my own events and my own trainings, just like the one I'm doing this weekend, you know, they say, hey, when you start a company, you need to have a mission. And so my company mission statement is right here on the screen, but it's big. It's to impact and mentor over 1 million people and help. Hopefully some of you will be in that million, achieving financial freedom, investing in apartments, following the system that I'm going to teach. And most of the buildings I buy are going to be working class communities. And so we do good financially for ourselves and our investors by doing good for the residents and the communities that these properties are in. So it's an opportunity to really be in a beautiful business. So what am I going to be teaching this weekend? And if you're not coming, what I want to impress upon you, for those that are coming, you're going to learn my complete system, okay? A to Z, 1, 2, 3, step by step. And this is the high level 4-step breakdown of my system. Okay, I would never recommend that anybody invest in any type of deal or any type of investment for that matter, whether it's real estate or not, until you understand what it is you're investing in. The biggest mistake that I see people make in any investment, whether it's real estate, crypto, you know, some company, they invest because somebody else is investing, or because they read an article in the newspaper or the Wall Street Journal or Instagram or an advertisement, or your friends are doing it, so you do it. But what I'm telling you, and I'm guilty of this too, by the way, because I want to fit in, I want to be accepted. You know, I once was in a high-level Tony Robbins mastermind, and everybody was investing in this venture capital firm. And I didn't understand it. I didn't even really know what they were doing. Honestly, I'm being authentic with you. But people that I knew and trusted were investing in it, and they had done their due diligence. And people would get together and talk about it. And I was left out. And I didn't want to be left out. And then I told myself, hey, these are smart people. These are successful people. They did the due diligence. If they invest in it, I'll invest in it. Well, I invested in it without doing my own diligence. And of course, it didn't go well. Okay. So I didn't understand what I was doing, but I did it for other reasons. So maybe some of you could also relate to that. And to me, that's a no-no. So the first thing I'm going to teach is you got to understand how multifamily works. What's the business model? How do we make money? How do we add value? Have you heard of value add? How do we add value? How do we run the numbers? You know, how do we calculate cash on cash return? How do we calculate the upside of the deal? How do we do a projection? Okay. How does the taxes work? How does depreciation work? How can we forecast how much depreciation loss we could have to potentially reduce our taxes? So the first thing I'm going to be teaching you is in that step 1, all the things I just mentioned, you know, understanding the deal. And I'm also going to teach you the vocabulary. You need to talk the talk in order to walk the walk. So I'm going to teach you that, you know, so if you've heard of terms like NOI, cap rate, T12, P&L, you know, DSCR, like you're going to understand these terms so that when you're talking to brokers, lenders, management companies, and potential investors, you're actually going to know what you're talking about. Okay. So first guarantee, my first promise at the event is you're going to understand it if you're in the room paying attention. Now, if you're not in the room, if you're in the hallway, if you're sitting there like this on your phone, scrolling on Instagram, then you're not going to understand it. But why does this matter? So look, if you're not coming to the event, first I would say try to rearrange your schedule to come. Okay. And I'm going to talk about how you can do that here. Or if you need to leave before I get there, just type in the chat, hey, I want to register. And you could come for free, by the way. That's right. You could come to my 2.5-day training event 100% free. And I'll tell you why I'm doing that when I get there. But you really want to understand the deal. You want to understand the numbers, the formulas, the vocabulary. So my promise to you is when you come to the event, you're going to understand the business model. Okay. The next thing you're going to understand is where to find deals and where not to find deals. And I'm going to cover small deals, medium-sized deals, and big deals. And there's a different place to look for these deals. Like we don't find 100-unit deals in the same place we find 10-unit deals. So I'm going to talk about finding deals. And then I'm going to talk about analyzing deals. And again, another promise is I'm going to give you a quick and easy way to analyze any apartment deal, whether it's 5 units, 50 units, or 500 units in 60 seconds or less. So you're going to be able to do that, and you're going to know where to find them. Okay. So you got to find them, you got to analyze them. Then we're going to talk about funding. Okay. Funding has debt, which is getting a loan, and it could be a loan from a lender, or it could be seller financing. And then there's a down payment, which is the equity. Okay. So I'm going to talk about getting the debt, and I'm going to talk about raising the money or getting the money from you, from investors, from the public, from friends and family. And I'm going to talk about the different strategies to raise money and how to put together, call it a pitch deck. Okay. So we're going to talk about that as well. And then we're going to talk about qualifying for, bank financing or Fannie Mae or Freddie Mac financing. What does it take to qualify to get those loans? What does it take for the property to qualify and for the individual to qualify? And then I'm going to teach you how to close the deal. Like, what are all the steps that need to happen to get a deal closed? But we're not going to stop there. We're going to talk about managing the deal, the KPIs, and I'm even going to talk to you about the 5 common exit strategies when you're ready to move out of the deal. So this is what we're going to cover. And look, if you're not coming, again, try to come, rearrange your life to come. But if you're not, I just want to impress upon you, you need to follow a proven system by somebody that knows what they're doing. Okay. The steps matter and the order matters. The order in which you do things matter. So I'm going to cover right here how you can come. And I'm going to continue with more content. Okay. But this event that I'm doing is literally 3 days from now. We will be, 4 days from now. Today's the 23rd. No, 3 days from right now, I'll be in Dallas and we will have started 2 hours ago. Okay. So the event starts Friday at 5 p.m. And I have an evening session Friday, and then we do networking. So you don't want to miss Friday because I kick things off with some training, and then we do networking. And so you're going to want to meet the other people that are at the event, because these are other people that, just like you, rearrange their life, some from Dallas, some from out of town, to come and train and learn the fundamentals of apartment investing. And so you're going to want to come Friday to not only hear me, but to be part of that networking event. Okay. And then we go all day Saturday from 9 to 5 and all day Sunday from 9 to 4. And to get your complimentary ticket, all you need to do is scan that QR code. Now, when you scan it, you'll see a free general admission ticket, and you'll also see a paid VIP ticket. And I'll cover that again later today on what's included for the VIP. But the VIP is like $200. If you could swing the $200, I highly recommend it, because you get lunch with me, you get better seating, and you get an extra hour training session that only is for the VIPs, and it's on underwriting a deal. Okay. So that's the weekend coming up this weekend, this Friday, Saturday, and Sunday in Dallas, Texas. It's an in-person event. It's not virtual and it's not being recorded for public use. So the only way you could benefit from the event is to be there in person, unfortunately. Fortunately for the people that are there, unfortunately for the people that aren't there. So I'm going to teach you how we make money. When I talked about understanding the deal, I'm going to talk about how the deal's cash flow and what you could expect in terms of cash on cash return. I'm going to talk about how we add value and how cap rate works and what a cap rate is, and how for every dollar of income that you generate, how it gives you more than $10 to $20 worth of value. Okay. And I'll say that again, for every dollar of extra income that you could generate through occupancy increases or rent increases makes the property worth $10 to $20 more in value. So $1 of rent increase makes the property $10 to $20 more valuable. So I'm going to show you how that works. And then I'm going to show you how, by being a business and an investor, you could reduce how much tax you're paying. And that's the cash flow quadrant there, ESBI. Okay, I'm going to explain to you how apartments are one of the most tax preferred investments in our lifetime. So in 2017, our government passed a law that gave us the maximum depreciation benefits available. But that law had the depreciation benefits decreasing until the end of 2026, where it would be completely phased out. But last year, you may have heard of the big, beautiful bill. One of the things it did is it restored what we call bonus depreciation. And I'm going to cover this more in the weekend training because I don't have time now. But again, my promise to you is you are going to understand how you could possibly benefit this year from investing. Because what bonus depreciation does is it accelerates the depreciation you would have over 5 or 15 years, and it accelerates it into the year you actually make the investment. So it's a very, very powerful law or provision that was passed. Okay, so this is huge. Like, this really does make apartments great again. And I've been going around the country talking about how this law is helping to make investing in apartments one of the best asset classes, again, in our lifetime. If you're paying tax and you want to legally pay less tax, you really need to understand this and take advantage of it. And I'm going to teach it to everybody that's going to be there this weekend. Okay, so we're going to talk about that. I'm going to cover the 24-year recipe that I've been using to decide where I'm going to buy. Okay, you have to be in a great market. You could have an average deal in a great location, and that's better than having what I would call a great deal in an average location. Okay, an average location cancels out the deal being great. You cannot have a great deal if it's in a bad or average location. But if you're in a great location, like, you could have an average deal, you know? And so what I've learned over the years is I have a formula for selecting top markets, you know, landlord friendly, business friendly, job growth, population growth above the US average, a big affordability gap between the cost of renting an apartment and the cost of buying a home. You see, the more people that cannot afford a home in your neighborhood, the down payment, the PITI, the principal, interest, tax, and insurance, the more expensive that is, the more likely the people are going to be renters. Okay. I also look at construction and supply and units coming online. And I look at, is this area have a diversified economic base? Okay. So if you follow this recipe, more often than not, you're going to do better. Okay. So we're going to go into that, and I'm going to have you in class pick your markets that you're going to invest in. I'm going to show you how to analyze the deals. I'm going to show you a quick way where all you need is the number of units and the monthly rents. And then I'm going to show you how to do a detailed underwriting. Okay. And we're going to learn what these are, but we're going to learn, what a 12-month profit and loss statement is, a rent roll, the unit mix, how to do a rehab and debt estimate, where and how to pull market data. I'm going to show you my property analyzer, and I'm going to talk about actual net operating income and how you put together your pro forma, not the broker's pro forma, but your pro forma. Okay, so we're going to cover all this. And again, if you're sitting here saying, "Hey, Brad, I can't come to the event," well, you're gonna want to be able to do this. Okay, everything I'm talking about here, you're going to want to follow a proven formula, a proven system. Okay, I'm going to cover the different ways to invest. I'm going to cover the ways I invested. So some people want to buy a small apartment with their own money. I call that like individual or direct ownership. You buy 32 units like I started. Some of you want to be passive investors in a syndication. Some of you want to be the GP or the active investor. If you know where you want to start, type it in the chat. Okay, just type in GP. If you know you want to be a GP, type in LP. If you know you want to be an LP, or type in solo. If you just want to buy your own deal with your own money, go ahead and type it in now. I just want to see what you want to do. So I see LP, I see some LPs, I see some GPs. I see LP and GP. That's great. Well, you're going to learn how to do that, and you're going to learn the pros and cons. Okay. And there are cons to being a GP, and there are pros. Like the pros of being a GP is you can make more money. The cons is you have more responsibility, and so there's pros and cons. And some of you are going to want to, I see some of you typing in solo deals. And so again, there's pros and cons of that. I know. And here's the thing. I've done all of these. I bought my own deals with my own money. I've done syndications as a GP or co-GP, where I'm on the active investor team, and I've done as an LP or passive investor. And so I'm going to share with you like the good, the bad, and the ugly, or let me just say the pros and the cons of each of these three choices, because I want to empower you to find a great market, decide how you're going to proceed, and get into deals. Okay, that's my goal. So I'm going to show you, this is a quick example, but I'm going to show you how this is an example of, just say, a $10 million deal where 80% of the profit goes to the LPs and 20% of the profit goes to the GPs. That's a common deal structure. So you see at the top of that first column, it says $10 million deal, 80-20 LP GP split. And you invest $50K as a passive or as a GP. So in both columns, there's a $50K investment. And you can see here, the passive investor is basically getting a cash return and a sales proceed. So their $50K turns into $90. And the GP also gets paid the same on the $50K. If you look at the second row and the third, fourth, fifth row, they're both making the same amount of money on their money. But because the GP is the active investor, they could, because they're doing all the work, and it takes time and energy and expertise to do the work, to find the deals, to analyze the deals, to raise the money, to secure the debt, to manage the deal, to manage the rehab, to deal with any nuances that come up. And so a common way to structure the deal is do it for the GP to take 20% of the cash flow and 20% of the sales proceeds. So you can see that the GP, who's the active working investor or investors, are going to make like 10 times more than the passive investor in the same deal. Okay. So I'm going to cover that. I'm going to cover raising money. If you want to do a syndication, you're going to need to get started on raising money. And I know a little bit about raising money. Just in the past 5 years, I've raised over $100 million. In one webinar, I did 22 million in an hour and 7 minutes. Okay. So I'm going to teach you like who your ideal investor is. Some of you are doctors and you have access to other doctors. Some of you are airline pilots and you might be part of an airline pilot union or something like that. Some of you may not know where to start. maybe you start with your friends, your people in your church, your community, and so each of you are going to want to determine, like, who is my ideal investor? Who do I currently have access to? Where do they go? Where do they have conferences? Do they have conventions? And you find out who your ideal investor is and where do they go and how you could connect with them. And then as you grow and progress, you could actually have an automated system using, funnels and AI and advertising and develop a CRM system that has automation and even AI, system to communicate with your prospects and draw them in and keep them in, so that when you have a deal, you already have that relationship with them, so they know, like, and trust you. So I'm going to cover that. I'm going to cover all these steps of closing deals. I'm going to cover making offers, signing contracts, putting together your specific value add business plan for your specific property once you find it, the due diligence steps, the entity formation. I already talked about capital raising. I'm going to talk about the PPM, the legal docs, the company agreement, getting the debt, the loan agreement, the insurance you need in your property management company that you're going to need to hire, and what's in that contract. So, ladies and gentlemen, literally for 2.5 days, I am the only instructor here. This is not a multi-speaker event where I'm going to be popping in and, talking smack, and then bringing in different people that are going to talk smack and motivate you and inspire you, but then leave you without a system. You see, that's what happens in a multi-speaker event. The host motivates and inspires you, and they bring in a bunch of other speakers and they motivate and inspire you, and you're taking notes, but everybody's like, talking big picture. Okay. And what happens at this event is I start off talking big picture, but every hour that goes by, I'm drilling down and I'm drilling down. I'm showing you how to find them, how to analyze them, how to fund them, how to close them, how to manage them, and how to operate them, and even how to exit. Okay. I'm going to show you KPIs. Like, what do I track on a daily basis, a weekly basis, a monthly basis? This is just a screenshot for what I track on a weekly basis. I'm not going to be able to go into everything, but we're going to talk about tracking and, like, what do we track once we own the deal? Okay. And I'm going to talk about, selling your deal, getting BOVs, refinancing, recapitalizing. And even like right now, where some people that own deals, they're having to do capital calls, loan extensions, loan modifications. And I'm going to talk about all that stuff too. So, like, nothing's going to be left out. Okay. Nothing. There's not going to be anything that's going to be left out. So again, there's more people that keep showing up, and I'm going to be finishing here. But ladies and gentlemen, look, I promise you, for those of you that are coming, like, some of you have already registered, and maybe you're sitting there thinking, well, it's a free event. Is it really going to be worth it? And the reason I'm doing a free event right now, I used to do these events for several $100s, and I'd get 500 to 700 people back in the heyday of the business cycle. But, now what's happened is, over the past couple of years, people got involved in other asset classes. People got excited about technology or crypto or AI or whatever. And a lot of people stopped paying attention to multifamily buildings, because in 2023 and 24 and even 25, there were a lot of challenges in the business, with interest rates being high, and, some of the people that bought at the top of the market went through some challenges. And so there are actually more deals for sale right now than people in my community could buy. Like, there's a lot of deals for sale. And so my passion is, I'm committed to this industry. This industry has made me personally tens of millions of dollars. And I've seen hundreds, if not thousands, of my students win in this industry since I've been coaching people since 2006. Like, I've literally been coaching people for 20 years, and I've been investing myself for 25 years, and I've seen so many people win. And so I've been busting my ass harder than ever, going around the country, basically sharing with people, like, hey, we got to be looking at multifamily right now. Like, and it was just like, here's an example. Like 6 months ago, one of my best friends that used to do apartments was telling me all about data centers. Oh, I don't want to do apartments anymore. I'm investing in data centers. And now, like, it was so new and it sounded so sexy and so exciting. I call it like shiny object syndrome. But now, like all the warts coming out about investing in data centers. Oh, it takes a lot of water and there's a lot of expenses and there's a lot of this and a lot of that. So I would just say like multifamily has been around forever. People always need a place to live. Yeah, we went through a cycle. Okay, just like we did in 2008, 9, and 10. And we're coming out of the cycle. I'll show you the data. I'll show you the proof. I'll show you the evidence of success from me and my students that are committed to this business. And you could be the next multifamily success story. You can be. I'm not promising that you will be, but I can promise you that if you don't get into the game, if you don't study the business, that you won't be. Okay. So anybody can succeed in this business if you're coachable, if you're committed to learning and, and not giving up. So I'm really excited about the event coming this weekend, June 26th. We start at 5 p.m. Those of you that are registered, you've already been getting the emails. You've been getting the location. Registration starts at 3:30, I think, or 4 o'clock. So make sure you get there before 5 and get registered. And then we open the doors, like right at 5. And I'm going to start with an hour or two of like a powerful intro session that you don't want to miss. And then we're going to have networking, and you don't want to miss that, because who knows, you might meet a partner, you might meet an investor, you might meet an industry expert in some capacity. So, or you just might meet somebody that will become your friend. Okay. But Friday night, starting at 5, Saturday 9 to 4, Saturday 9 to 5, Sunday 9 to 4. That's what's happening in Dallas, Texas this weekend. So I'm glad that more people came in from the time that I started. I did record this session. So if you missed part of it, you'll be getting the recording. And I said I'd be finished in like 30 minutes after I started, and I went over a little long, but hopefully there was something in here for everybody. If you're coming to the event, you have a preview, and hopefully you're more inspired and more excited to show up on time. Okay. And if you're not able to come, I impressed upon you how important it is to follow a system, to understand the numbers, to understand how to find deals, to understand the differences between, finding and managing smaller deals and bigger deals, and the difference in the income you can make between an LP and a GP. So I covered a lot. So Emmy, the hotel and location is provided once you register. Okay. Unfortunately, I don't mind explaining why, even though it's a free event, it's a private event. And so there's a lot of people that may just want to come and hang out in the parking lot or put like business cards on your windshield wipers or something like that. That doesn't work anyway. Okay. So the people that register, they will get the location, and it'll be in your inbox. And by the way, for those of you that registered, you should already have the location. You should be getting auto text messages, emails, and even human phone calls to confirm that you're coming, because we're turning in now. Like, we need to tell the venue like how many seats we're going to have and how many lunches we need to have and all that type of stuff. So if you are getting messages from us asking you to confirm your seat, I need for you to do that. Like, take 60 seconds to respond to the text, to respond to the email, to respond to the phone call. And yes, we're even using AI to call every single person that registered for the event, because I only have so many people on my team, and we're calling you with humans as well. But don't be put off if it's an AI. All you need to do is say, yes, I'm coming, if you're coming. So please, I beg you, I pray, take the time to confirm, because we have to turn in our order. And I would hate for you to show up and there not be food or a seat for you. We'll do our best to improvise and accommodate, but it's going to make everybody's life so much easier if you take the time to respond to our emails, texts, or phone calls and confirm that you're coming. Thank you so much, everybody. Thank you so much. And for those that are coming, you are in for a treat. And I didn't even tell you, but Sunday, I'm going to put you on a bus and I'm going to actually show you a property that I own. And I'm going to show you one or two that students in my coaching program own. So not only are you going to learn the theory about the business model, the value play, the finding the deals, the analyzing the deals, the closing the deals, the managing the deals, but you'll get to see actual properties in Dallas that are owned by people in my community. And who knows, maybe you'll be next. I hope you will. All right, I'll let you all go. Good night. See you all in Dallas. And look, if you can't come to Dallas, get in touch with me and my team. Okay, I'll do a future event. I don't know when and where, but I'll do another event. Okay, I do a handful a year. And we have other trainings, free trainings and some paid programs that you can do online. So if you can't come to the event, you got to get started. I got to impress upon you how important it is to learn and get started. And I have a lot of resources for you as well. Okay, so good night. This is not goodbye. It is see you on Friday, Saturday, and Sunday. See you soon. Bye-bye.